Good morning. Welcome to the market forecast. It's Friday, May the 21st. I have casual Friday at the office today. It's a beautiful day outside in Chicago. It's going to be a real good day to make a little money early and get out there and enjoy some of the weather here. As always, thanks for trusting me with your time. My name is John Hoagland. We'll be looking for accurate context, good risk management, and as always, patience for all of you. Economic numbers this morning, nothing due out yet here this morning in the U.S. At 8:45, we do have the PMI numbers coming out for the U.S. We did have some good PMI numbers coming out in Europe and Great Britain, so there's possibly a good sign for us. And then at 9 o'clock, existing home sales that should be pretty well watched and perhaps impactful on the markets this morning as far as other news is concerned. The cryptocurrencies still kind of getting a little bit of pressure. Yellen said yesterday that she thinks that all crypto transactions above 10,000 should be reported. The pressure starts to come in on those cryptocurrencies. Yellen also proposed a 15% minimum tax on global U.S. corporate income. All the money these corporations are making overseas will be taxed, apparently. At least that's the plan. U.S. stocks yesterday broke a 3-day losing streak as jobless claims fall to a pre-pandemic low. Set to continue the grind this morning. We're going to take a look at those situations here as we get into the market forecast. And crude prices continue to waffle while the threat of Iranian crude oil returning to the market remains unknown. As always, make sure you hit that like button. Always share, comment, question, feedback, and heckling are always welcome. And make sure you subscribe to our YouTube channel so you can get notifications when we do go live. The dollar, well, the VIX down a little bit is to be expected, around to 20.44 last I checked. Dollar index, flat, 89, 86-ish. And the 10-year yield off a little bit this morning, a little lower, 1.61%. As always, I got to say hello to my friends here. My brother Rick, good morning to you. Richie B, happy Friday, finally. Yes, Theo, good morning, Theo. Could have been a different look this morning. Little lack of following orders yesterday. But hey, next week is another week. Maybe we'll get a chance to chat later on. Brian, good morning. George, good morning. James Ednelson, John, the infamous Felix Escobar is in the room. Bill Phillips, good to see you. Jason Cesar, Laura, Shady Trader, good morning. Vince, pretty good opening range trade in the gold market this morning. Hoping maybe you took that one this morning. Hopefully, maybe. Lamus, good morning. Sunil, good morning. Amanda, good morning. Subconscious. Andre, Oleg, Tim, Monkey Gains, good morning. PD Legend, good morning. Keith, Trading Research. Greg, Mike, the Chef Magallanes is in the room. Ed is S. Vici, good morning. And Mr. Shine's Mystery Channel, John S., good morning. Wednesday is group coaching day. This is the link to sign up to join me for group coaching next Wednesday. In case you're interested, just pop in there, register, and we'll look forward to seeing any questions we can answer. And we got a nice little area here we're looking at in the crude oil. Let's get a start on these charts. Let me get to the daily and let's get going. All right, so there we go. Now we've got our daily in crude, obviously. Longer time frame structure to the upside remains. But is it going to hold? Take a look at what we've got going on here. We've got a whole bunch of very interesting situations in crude oil this morning, just in technicals and where it is in relation to where it has been. We lost 22,000 in open interest yesterday. Almost all of that only due to expiration. So no major changes in this down move yesterday, which I find kind of interesting. It makes this push to the downside, third day down in a row, a little bit hollow. The volume wasn't all that great, even with rollover and everything. This support zone here, 63.50 weekly kickoff low, and last week's low was supportive initially, now is appearing to be resistant. So this resistance zone goes from really last week's low all the way up to weekly kickoff high of 63.50. It's kind of a big zone to be looking for an opportunity, but I think that's where our opportunities are going to be for us today. I think I see fish between these two levels. Take a look at the 30-minute chart. All right, so here we go. Decent push down yesterday, kind of hollow again as far as open interest is concerned. We've gotten a little bit long in overnight inventory. We're wrestling really with our high from yesterday's session. We have settlement all the way down here, so we do have some overnight longs here. And this whole area between 63.50 and 63.20, last week's low, just a very kind of a target-rich environment. We've got, a settlement price that we just went to from the day before yesterday. We've got an important inflection level just above. We've got last week's low just below. This whole area here looks very interesting to me, but I got to try and remain patient. I've got to look for some sort of information telling me that the market is ready to move away from this area before I can get involved, because I can easily chop myself up going long above, short below, or short below and long above either of these important inflection levels. So while we are largely in range and somewhat in value, if we reject higher prices, we can come back all the way down and come back and recheck settlement. If we accept higher prices above last week's low or even above the 63.50 level, we may see buyers come back into this market. Again, rollovers, for all intents and purposes, over. Our longer time frame is now free to roam around the country, if you will. They're more likely to become directional after rollover. So it's going to be an interesting day today in crude oil. Try and stay patient. I know it's difficult, especially when there's so much confluence in this area, to get active early. Just let the market come to you. I think if you stay patient and wait for an opportunity that presents itself in a very cheap way, you may end up with a potentially large profit on trades from this area here. Again, I think I see fish here. Doesn't mean we have to do anything. We could just stay kind of locked in this area for the better part of the day. I don't know. But just sensing the fact with all this confluence in this area just looks like an interesting spot. You're right. And of course, any news that may come out may affect that as well. Here's the E-mini S&Ps. I think we talked a couple of weeks ago about the fact that we've maybe coming into a period of balance, but balance with volatility. And I think that we're really seeing that. I mean, last week we had 3 good down days. We've kind of settled into this area, but we've got some bigger ranges. It's been a challenging week for me in the S&Ps. Even with the hypothesis, the longer-term hypothesis, that we're looking at a range-bound market, and a range-bound market that's going to be providing some larger opportunities with some volatility to it. So the range-bound volatility was expected has occurred. This is what we looked for. This is what we were trying to kind of trade to. Open interest, little change this week. We added 21,000 in open interest yesterday, but when we take a look at where we are right now, here's where we opened the week. Here's where we are right now. We haven't moved, and it's kind of showing in open interest. There was very little change in open interest all week long, up a little, down a little, up a little, down a little. We are starting to come into the front end of rollover in our equities, and treasuries were in rollover. So this week's high is pivotal. You're going to see it more clearly on the 30-minute chart. I just have to continually remind myself, because just like most retail traders, I really love the short side in the equities because the money comes faster. You can just see it here. 3 days just down, and it's taken us 1, 2, 3, 4, 5, 6, 7, and we still haven't retraced last week's range. We're kind of range bound here, but again with some substantial volatility inside of this range. But I have to remind myself, if there's no bad news, if there's no bad headline news, if there's nothing that comes out that's basically, scaring the market, it has a tendency just to continue the grind to the upside. So this week's high, I think, is going to be somewhat pivotal today. 30-minute chart. Okay, so volatile, range-bound activity. It's been an interesting and challenging week in the S&Ps and in the equities. What are we looking at? We've got settlement down here at 41.54 quarter. We are holding some longs. We are at risk of opening with a potential gap to the upside. This is this week's high. Okay, this goes all the way back to Sunday night, I believe. So this week's high is going to be somewhat pivotal, and we'll take a look at the exactness of ranges, the day session ranges. They've been very close as far as their highs are, except of course on Wednesday when we had that big move to the downside, and then get range, and then the big move to the upside back up here yesterday. Gap rules, overnight longs. If the overnight longs don't get what they want right away, they may pull this market back towards settlement and point of control from yesterday. If we open with a gap and we can't close that gap, I think it's a cinch that we may go ahead and take a look at the high from this week. And then if we find some momentum up above that level, we could continue higher. It's Friday. It's there's not a lot of news coming out. If it ends up being a relatively slow day, I'm very cautious to sell into slow grinding days. Do we have some potential for profit taking? Well, where are we? We haven't really taken any or made any real profits. We're basically where we opened the week. So not thinking we're going to be looking for any profit taking events today. Be patient, be careful. One of the most important things is going to be, are we opening with a gap, and if we can close that gap. If we open with a gap, close the gap, reaccept inside value from yesterday, higher probability of moving price lower, reaccepting inside value from yesterday. No gap close, no acceptance of yesterday's range or value. I see a cinch check of weekly kickoff high up here at 40. Of the weekly high here, weekly kickoff high is another 100 points to the upside. NASDAQ, same but different. Equities, what do you do with them? We added 800 in open interest on this move right to weekly kickoff high yesterday. We are at risk of opening with a gap and opening above an important inflection level. 13,513 is weekly kickoff high right here. We're trading above it right now. This may be a situation that would cause longer, stronger participants in these markets to what the heck is going on with this chart? There it is. Okay. My trend line was in the wrong spot. Now it's fixed. This may bring in or incite longer, stronger traders to enter into this market, either adding to longs or reducing shorts, or adding shorts and reducing longs. So this weekly kickoff is going to be pivotal for us today. Long bets came in, not tremendous yesterday, and with that 800 in open interest increase. Short time frame structure remains. We've got higher lows, we've got higher highs. we're up against the kind of the high end of that channel right now. Take a look at the 30-minute chart. Settlement 13,486.5. Look at the tight roping that this market did last night. Settlement right here, tight roping right on weekly kickoff high. Again, are we going to open with a gap or not? If we can't close the gap, we'll look for this area to be supportive. This is, again, another target-rich environment. I think that there's fish in the area here. If we throw our lure in the right direction, we may catch some of those fish. Again, opening with a gap, can't close the gap, we look to go higher. If we close the gap and reaccept inside value and below this weekly kickoff level, then there's a increasing probability that that price is being rejected above this, and we could see this market move all the way back down to value low as one possible hypothesis. Gold this morning. Been kind of my favorite market this week. Obvious upside structure remaining, adding 6,100 in open interest with a test of the weekly kickoff high yesterday, overlapping to higher range today. The auction seems to be healthy. Over the last 5 sessions, we've added an extra 5% in open interest. Money is coming into the long side. As long as we maintain decent volume, if we can increase volume up above this level, I think there's plenty of upside space for crude oil to continue. We've got our high right now, basically our weekly high. If we can take that out, what do we got? We got space. So this 1882 zone, pivotal this morning. The auction is presenting as healthy. If it gets too long, we're going to find out, and hopefully cheaply. But the opening range remains the low of the regular trading hour session. Vince, hopefully you saw it. Now, I see what you're saying. It was too close to settlement, and I agree with that. But everything in context, we also had some overnight longs. Settlement was one tick below weekly kickoff high at 1882. We had overnight shorts reconcile before the open. The market, the opening range is 2 ticks above the important inflection level that is the weekly kickoff level. When that happens, that kind of negates the idea that we're going to be patient staying because it's inside of value, this important inflection level. Look at settlement here. Settlement from yesterday. This is a kind of a high target area, and if that opening range remains low, again, we're looking at space to perhaps the weekly high, which is right here, or points even further if we can accept above that level. So I agree with you. It opened in range and in value, so we try and stay patient. The difference would be this morning the fact that it traded right back to and opened above this important inflection level that says, okay, this is worth a try. Okay? So yeah, there was no inventory technically by the time we opened. No overnight inventory. That had all been reconciled. The fact that we opened above it and left that opening range above that important inflection level said to me, yeah, we're gonna this is a go. So it's all in understanding the context, and we are working on doing that. All right. 6E. Upside structure remaining. It appears to be struggling. We're kind of stuck here in a kind of a range-bound level here, kind of holding last week's high as support overall. Open interest is continuing to rise. We added another 2,600 to the upside yesterday. It does seem as though money is still coming into the market. What kind of worries me is overall we're seeing volume starting to fall off in the upside momentum here. So when we look at the auction process, we want to see open interest coming in, which we're seeing, but we want to see increases in volume as well. And I don't think that we're seeing that. So, supportive levels, the last week's last week's high is a decent level of support. I'm not really looking for much in this market. We've got 4 days in balance here. When we break out of this balance in either direction and find acceptance, I'm going to go with it. But until then, I'm fading the extremes. And the 10-year yield off a little bit this morning. Here's the daily. Again, Treasury's in rollover. We're still trading June. At some point next week, we'll have to switch over to September. But for now, the volume is still in June. We've got a lot of range-bound activity, in rollover. We haven't really done much. We added 40,000 in open interest on this move to the upside yesterday, but we still see volume overall kind of falling off. So not looking for anything huge in this market here yet today, unless, of course, somebody comes out and says something that may jar this market. We kind of got a little bit of an 8-day balance going here. The high of that 8-day balance would be 132 and 21 and a half, 30 seconds. This could bring a breakout of this balancing area and a move perhaps back to last week's high, but I think it's a pretty low probability test. Both the euro and the 10-year are somewhat off my radar this morning. Now, one thing about the 10-year that we're going to check right now, did we close the gap? I don't think we did. When we opened this morning, we opened leaving a 1-tick gap above yesterday's high. It's kind of hard to see on this chart, but I don't think that we did that, and we're one time framing higher. So if I'm not going to be involved in this market, or if I'm even thinking about being involved in this market, at this point, I don't want to be looking for sells. We are one time framing higher from the 530 bar, higher lows, higher highs. Don't fight this market without some sort of structure to lean on. Last week's high might provide that opportunity. It does appear that we are attempting to break out of this week's range. If we accept it and we build volume and we build momentum up here, it's something you're going to want to go with and not fight. All right? So it is Friday. I am looking forward to a good morning, making a little bit of money, calling it a day, taking care of some business, and then starting the weekend. Hey, Lacey, want to say hi? Come here. Hey, say hi, Lacey. Say hi. Lacey's ready for the weekend too. Okay, right. Have a great trading day. No recap today, being Friday, especially during the summer. We are going to be getting some good rest this weekend. Looks like the weather's going to be nice. Going to try and get a few things done around the house and have a little fun, spend some time with some friends and family. Make sure you're good to yourself. Make sure you're good to others. Wash your hands. Say a prayer for world peace. And we'll see you back here on Monday. Have a great trading day and have a wonderful, restful weekend. Lots more business to do next week. So these markets are opportunity-making machines. We're going to find a way to take advantage of that. Have a great day, great weekend. We'll see you next week.